start to get into the media stuff, so to say. Can you tell us a bit about yourself, James? Like, what is your background? What was your first experience with blockchain tech, and what made you go down the Web3 path?
Sure, absolutely, no problem. So I think I'm older than a lot of people in this space. So maybe my background has a little bit of diversity to it that some of the others haven't had previously, or at least not spending 10 years doing these things. But by background, I'm a physicist. So I studied physics, did a year of all of that before I decided to move into finance in the City of London. And I got myself a job on an old-fashioned trading floor. So I had a colored jacket. It was all waving hands, signing pieces of paper and passing them around on the life floor. And I lasted there for about 2.5 months before the whole place shut down and went electronic. So I just caught the tail end of the pits that I was dealing with. I did some work as well in Chicago on the floors there. And as the whole market went electronic, myself and some other guys founded a software business to help people with electronic trading. And we built a sort of robotic, automatic trading platform, as we used to refer to it then. It was the very first high-frequency trading platform connected to derivatives exchanges anywhere in the world. I was the architect. I wrote most of the code, and we sold it to everyone who is anyone. And it's the header files for that form the base for a whole load of the major high-frequency trading platforms across Chicago, across Amsterdam, across London, across Sydney, across Frankfurt, and got to meet loads and loads of people, and eventually sold that business to a company called Cantor Fitzgerald. And if you've never heard of them, they're the world's second biggest broker. So they are responsible for all of things like the US government bond markets. Moved to New York, dealt with government bond trading with all of the major banks, built some of the big electronic trading platforms. That one was sold into NASDAQ. But Cantor's this massive interdealer broker, touched repo, swaps, mortgage-backed securities, FX, all sorts of things. Eventually left there, got into commodities, did 7 years running power and gas markets across Europe with every single entity across Europe, built a huge business, sold that to ICE with those guys, did some work with SocGen and Deutsche Börse for about another 7 years, building a company called London Derivatives Exchange. And then eventually fell into blockchain when I was headhunted to be CFO for a company called Crypterium. That's not particularly big now, and I didn't like all of the Russian owners at some point, so I stepped away from that after about 6 months. But back in 2017, when I was CFO, we did the biggest ICO in the world by number of participants. We raised $83 million at the height in 2017. So absolutely great raise, great prospect. Main competitor for Crypto.com when it had another name. Built that out. And since then, I've done a little bit with some of the poker guys. Touched on some other brokerage with a company called BVNK. Before joining up with Matthias and Lars and all of these guys to build projects in Web3 focused on trading platforms. So that's what you get when you ask an older guy to give you his background. It's a little bit longer.
No, that's perfect. That's a response that is more than I expected. I mean, how many years of experience is that in the financial markets, and strictly financial markets? I mean, from the beginning, you've been in it, so to say.
25 years since I started doing futures and options.
Oh, wow. That's fantastic.
Yeah, and always building platforms for trading them, execution, matching engines, all the way through. So I'm one of the few people who's touched all of the major derivatives exchanges in the world. I've touched all of them at some point.
And at which year was it when you first found out about blockchain? What was your first?
So there was this wonderful guy who was a client of mine at the time, a guy called Bart Pike. And at the time, he was managing director for a company called Mercuria, who was an enormous oil trader out of Geneva. And he was running this business. We were at a conference it must have been 2013, maybe 2012, but I think it was probably 2013. And he said to me, "Have you heard about this Bitcoin thing?" And he showed me his wallet, and he had his wallet on his phone, and he was doing a bunch of trades with Bitcoin, and he had purchased an enormous number of them, which I am assured he will have kept right the way through. And he said to me, I will send you a dozen of these. And I tried to open a wallet for him to send it to, and the Wi-Fi did not work at this conference center, and I couldn't open a wallet, and I never followed up. And I did a little bit of mining and stuff with some friends back in about 2014, but we never held on to any of it. And in 2017, I was paid in Bitcoin. So I used to be paid 4 or 5 Bitcoin a month to work in 2017. So I've been around from the early days of a lot of this.
Oh, that's crazy. I mean, I'm sure that's one of on the regret list that you didn't follow up on that call.
Yes, I feel like I might have been founding my own blockchain back in 2018 if I'd followed up on that one in the right way.
Yeah, awesome. Well, since the community has started rolling in, I think it is a good time that we start. So I would like to welcome everyone to our 8th edition of the Entity Project Dialogues. And this time around, we are sitting down with one of the newest projects building on the MultiverseX ecosystem to find out more what drives them, what is their vision of the ecosystem, and what might be in the future. What would the future hold for them, and also touching on broader subjects as well. So joining me today is the Chief Product Officer of DX25, James Davies, and also my colleague Michael Steven is joining us, who is the product owner at Entity. So this week we'll delve into the concepts of concentrated liquidity provisioning, derivatives, cross-chain dexes, and many more innovative solutions that DX25 aims to address in a very unique manner. So, first and foremost, James, I would like to know, how did you guys initially discover Multiverse X, and what specific aspects of this ecosystem attracted you to build on this blockchain out of all of them? What was the decisive factor that convinced you to choose this particular ecosystem for your development?
Well, it's it's a big question. So let's start. I think we came across the Multiverse X guys back in the early half of last year. We were building a number of different platforms. The group of us that sit behind this, and we were approached to build a lending platform on another blockchain, and it was suggested to us that would also go down well and work effectively on Multiverse X. So we reached out to them at the time. We had some big calls with all of the founders of Multiverse X, and I don't think we ever really managed to get to a place where that was a top priority for either of us, but it certainly piqued the interest, and it gave us the time for our developers to take a good deep look at exactly how the platform operated and really start to pick apart what the values were. And we're a Rust team. We're a Rust house. We really like blockchains that enable us to bring state machine and more complex tooling, which is, whilst it's possible on EVM, it's certainly easier to bring these things into Rust-based chains and to be able to develop quickly from there. So we like that aspect. And the other thing that we look for is stability. So we want to know that there's good quality sharding plans on it, that there's a good set of tooling and VMs on there, and that they've got some traction. And then you start to see, the little bits around the side, like some of the meta-chain capable stuff, which is really interesting in the Multiverse X narrative. That means that we can see that projects are going to be attracted to it. And then we also attended some of the stuff that they had in Paris, where we got to meet a lot of the community and got to understand how broadly they were gripped. And at that stage, we were working through the fact that we were probably going to build there, and we got to engage with the community and see what an incredibly great and diverse community it is. So I think, apart from the technology, which I could talk about at length, the thing that's attracted us most is the passion that's in the community. How the people are really engaged with these projects and they want them to succeed. What we felt we could bring, as well as a bunch of innovation, we felt we could make this centered on that community, that we could really find a way to build something that people could take part in and they could get some good rewards out of, and really feel like they had some properties that were more community owned at the end of this, rather than owned by a centralized entity or a slightly veiled non-entity. We wanted to really engage that community and take advantage of all of this great technology that Multiverse X has put in place. So those were the most attractive aspects for us. And this all comes off the introduction. So the people that we've worked with on some of our other projects in the past, they were already engaged in this community, and they were strong advocates for us that we need to bring this set of knowledge and set of projects that we think we want to develop to this, that this is the right place for us. And we're very happy with the response we've had back out of the community when we said, okay, yes, we will come here and build this here.
Awesome. That's quite surprising that one of the deciding factors for you to come here was actually the community. So hats off to the Multiverse X community for being such an engaged and passionate user base out of so many blockchains, and we're always the noisiest when it comes to spreading news. So
let me share a small story there. Then I think when I went to the Paris blockchain conference, the Paris Multiverse X conference that was held, I tried not to just spend the time with all the people I know who are great, and some of the market makers who are fantastic and well-enabled people, but I went and sat in the audience and just talked to the people around me. And what struck me is I remember this one conversation where I was chatting to the person next to me who was a chef from Brussels. And he'd come down, he'd put a large portion of his savings into Multiverse X, and he was just backing the projects, and he'd come to this conference. He wasn't a technologist. He wasn't a financial markets person. He wasn't somebody who was going to make a fantastic use in his own business of one of these projects going forward. He was somebody who'd got behind the message. And he was somebody who was willing to support any of these projects and wanted to use them, and wanted to see that his capital would be open and traded amongst these entities, that he would be faced with a transparent ecosystem that he doesn't get from the banking, and he doesn't do if he's using KBX or whichever of the Belgian banks that he would use. He wanted to be able to see what was going on with that money. So he was passionate about this, and he exemplified what I saw again and again and again across that community, which was a lot of individuals who are well engaged, who really bought into this messaging. And people like that don't vanish. They're going to stay with this for a long time, which means that we've got a solid bedrock of community that we can sell this platform into, and we can provide services to, who are going to want to use something where they can see the returns that come out of it and get that transparency.
Awesome. And what the foundation laid of the reason that brought you over to the Multiverse X ecosystem, I would like to delve a bit deeper into the inception of DX25. I'm eager to learn about the inspiration and motivation that prompted you to embark on this ambitious project. Could you discuss the driving forces and the vision that ultimately led you to the creation of DX25?
Okay, so let's talk about DEXs. Let's talk about DEXs, not just on Multiverse X's, but DEXs everywhere. They were a really, really good innovation. The first one, where you're seeing Uniswap come out at the beginning, where it allowed people to have an open, scalable, transparent way of trading on chain. And the adoption, I've got friends all over the world who were putting their assets onto Uniswap and getting these returns from them. But over time, we started to see that the return for the locked up assets just weren't good enough, that the straightforward AMM model with one non-concentrated liquidity, the Uniswap V1 model, didn't scale. It wasn't making the returns in the right way. So we see innovation coming in. We see Curve. We see Balancer. We see Uniswap V3 coming in. We see concentrated liquidity starting to be copycatted everywhere and going into PancakeSwap and all these other places. And that's fantastic to see all that innovation coming through. But the community response was different, because suddenly, for you to make a return, you had to spend quite a lot of your time adjusting your levels and making sure that your liquidity was in focus at that point in time. And then we start to see when volatility comes in, and we see the issues that we had with last year, where we've had crypto winter coming in. As the volatility came in and people are trying to move the liquidity from one pool to another because the fee levels aren't appropriate for the volatility, and it's just too confusing for the end user to know where to go. And you see this DeFi ecosystem becoming more fragmented, where people don't know how to be able to transact what they want to transact. And then I talk to people who are trading on centralized exchanges. I've got businesses that I've got stakes in London, and I go and speak to these people, and they're into crypto, and they do a lot of things in crypto. And I say, oh, you can do this on a DEX. Now, they don't know how to use the DEX. They've not really got past using MetaMask for a couple of NFTs once, and that's the limit of their involvement in DeFi. And I start to talk to them about how they do it, and they look at their first DEX, and it's just a new world to them. These are barriers after barriers after barriers. For us to get the adoption that we want to get, and what we want to do is we want to grow the pie and allow more people to come into this ecosystem, not just cannibalizing it from each other. We've got to give them the tools to do it. So we've got to make it easier to put liquidity onto it and maintain liquidity. We've got to make price discovery more natural. We've got to make it so as people look at the screen and they know what the prices are for it. And then we've got to start to bring in tools so as they can really do things like bring derivatives into this, which is where people get leverage. Look at the success story of GMX on Arbitrum for something that's actually incredibly simple and probably quite limited in how it can scale. We can do better. And if you've got the community behind it, which we have here inside Multiverse X, there's no reason we can't build that here. So we want to see these tools. So what we're going to do, we're going to bring in things like concentrated liquidity, but we're going to bring in some liquidity management tools in there. It's a bit like a fund manager. So you put your assets in and we'll work out for you how to keep it in the range. And we'll just follow really simple index-based stuff. None of this active management stuff where you're not sure what you're paying for. Just follow simple sets of rules to keep things live, to make sure that you're able to get a return. We will put displays up that look like order books, even though they're AMMs underneath. So if I'm coming from Binance to this, I want to know what the price impact of my swap is. I don't want some new fancy way of doing it. I want to know what the price impact of my swap is. I want an easy journey into it. So we'll do these easy journeys so as these people can participate as well. And the rest of us will have a straightforward time. Those of us who know DeFi will look at it and go, yeah, I know exactly what that is. I know what the impact of that is underneath. I know how to put my liquidity. And I'll still be able to do that. But we'll broaden the world. We'll make it easier for other people to come into. And then by bringing derivatives and derivatives trading into it as well, that means that we can provide risk management tools, and therefore people can bring more capital in and maybe control some of their risk around it, make sure that they're able to scale what they're doing with that capital. So this is our goal. This is how do we democratize DEXs again so as more people can get in? How do we make the user journey simpler? How do we provide tooling that's best of that attracts people inside of this space to go, okay, there's interesting stuff going. I can see how this expands DeFi. How do we make a noise that brings people to this ecosystem as opposed to the other 30 chains worth of ecosystems?
I think that's amazing, and I wanted to really chime in here because I've been in blockchain since 2017, and I've played on a number of blockchains and with a number of DeFi protocols. And usually the number one hurdle, so to say, for adoption and for user growth is user interface and clunky user experience, because even though the protocols are usually bringing a lot of innovation, it's very hard to translate that innovation into actually a working product and a product that indeed brings value, or at least translate how that value is brought to users. So I think that's a really, really good and ambitious goal to have. And it's amazing to see it here developing on Multiverse X. So, and on that note, I wanted to ask and maybe dive a bit deeper, what is the most underrated aspect of DX25? And why do you think it deserves more recognition? Of course, besides the stellar user experience that we're all looking forward to.
It's the people. It's always our people. The people are amazing. So I think there's some really good things in there. Like I'll talk directly about variable fees and how variable fees work, because I think that's probably the most underrated, transparent, and obvious differential. But I also just want to talk about things like upgradability. So we're really trying to take upgradability seriously. How do we enable it that our interfaces don't change as we move from one version to another? So as if somebody's built their own contracts to it, they're able to port from one version of ours to the next version without any big technical overhead. This is the thinking of fintech businesses. You know you're going to want to bring more features. When you do bring more features and you push out the next generation of stuff you want to do, how do you make sure the impact on the community is as low as possible so as they can take the maximum value from the version 2, version 3, version 4 of your feature sets? So we really will look at all of this in the round. But I know, and from doing Twitter Spaces and from doing communication about DeFi projects, that what people want to do is they want to understand what the features we're bringing in, how they differentiate from the other DEXs, not how we make upgradability work or how we're doing a better job of testing our platform and security. And I think one of our key features here is our variable fee levels. So one of the aspects that we see that's difficult inside things like Uniswap v3 at the moment is Uniswap v3, when you instantiate the pool, when you create a new pool, you set the fee level in that pool. And that means there's a fragmentation of liquidity between those different pools. So any interface that's doing order routing has to go and examine each of those different pools to work out what the impacts are. And if I'm committing liquidity, I have to go and look at the other pools to make sure that I'm not leaving an arbitrage open relative to the liquidity that I'm putting in there at any point in time. Now, we've got a different model here. So essentially we have think of it like a series of micro pools. Each of them can have a different fee level. And the liquidity provider, at the point that they push liquidity into a pair pool, that's when they set the fee level. And that changes the game theory, it changes the complexity level, and really starts to encourage the fees to be set for the market rate to be as competitive as possible. So when volatility drops, fees should drop. As volatility increases and market makers need to recover, there's a market rate in fees, and they start to increase those fees. And that gives us a way to start to ensure that liquidity will not dry up when there's volatility, because they can just increase their fees within the same place that the community is looking at for the same swappers to look at. And there's no need for them to shift that to somewhere else. And we think that that's a ground-breaking feature for concentrated liquidity DEXs. And we're publishing academic papers on that because we think that is so groundbreaking. So small feature, small aspect in the overall scheme of everything we're doing. But at each level in this, we're trying to bring something that makes a big difference.
Really, thank you for the in-depth answer. And I think this showcases the true power of DX25 in the fact that it's bringing multiple levels of innovation in the Multiverse X ecosystem, multiple primitives that's open, I think, in my opinion, the avenue for further innovation on top. As we all know, DeFi, it's ever-evolving ecosystem built on top of each other. And on that thought, I wanted to dive a bit more into your vision, or how do you see the Multiverse X ecosystem evolving? Of course, applied to your experience going into other blockchains and building other protocols. And also, what would DX25 role be in the ecosystem? How could you guys help shaping that future?
Okay, so I mean, this is hopefully a straightforward question with a straightforward answer, but I do have the ability to keep talking, so I may add a little bit more than that. I think this is about the community engagement now. This is about not the apps that are coming out of the central team, good as they are, and a base for coding as they are. This is now about the community adoption phase. So this is the time where ecosystems live or die. So that how many good quality projects are going to come on, and we hear about them, and this is why there's a launchpad. But we hear about them, They all need to come in, and the market needs to engage with these community projects and show that the community projects that they believe in those as well as the centralized, or as well as the protocol-driven projects. Let's put it that way. If they come in and they do well and they grow, then more will come in, and that's growing the pie, and that's more money coming into the ecosystem, and that then enables the sort of next levels of innovation to be considering that this is the right place to go. So, I remember seeing all of the stuff about how payment businesses can run, but this is, if you're able to get e-money companies across Europe to start to adopt this for internal ledger work, then that's something that a lot of the other communities don't have. And it's not about having one of them captive. This is about having, entities in Gibraltar where the gaming communities are, entities in Holland where the options communities are. It really is about, will those guys come over the line and engage? And we're hopefully an example of that, a grown-up team with a ton of experience saying, right, we think this is a place to put one of our chips down and build a project, and we think this is where we're going to go forward. And we're doing that, and it needs another 10, 20 firms like us building in every single vertical you can think of.
And I'm curious to ask you, since you are such a new player in the ecosystem, and as we've seen, you are quite passionate about the community as well. Is there any projects within the space that you believe warrants more attention that they're currently receiving? And if so, what elements of that project do you find particularly noteworthy?
Oh, that's a tricky one. That's a tricky one. But I mean, because my familiarity obviously is massively, massively with the people who are in our competitive landscape, and I don't feel like that's the right place to go for this particular conversation. So, the interesting one within the centralized group of, I keep saying centralized, I don't mean centralized, and I don't want to offend anyone because that's not the right way to put it. The protocol-led projects, the really interesting item in the protocol-led projects, from my perspective, is X Money. And I think the whole UTrust X Money combination, the ability to market that, the ability to take the protocol crypto side of it and make sure that it's MiCA compliant and can access across Europe, and then to be able to go around the different payment entities and show that how you can work with those two things together is a really interesting concept for how this can get embedded within the community. And I've worked in some massive entities from the perspective of e-money. So when I said I was doing poker, I'm talking about Entain. So I was part of Party Poker and all of the stuff that they were doing there. We tried to do crypto-led stuff inside of that business, and it went relatively well, but it was all for people who were sitting down at real games, and we had a thing called COVID, so that stopped people walking into casinos. But we had a big e-money business off the back of it. And so I've done 2 or 3 of these e-money businesses, how you scale and how you roll them out and how you make sure that they're not one country centric is super critical. And if they manage to make that work, that's probably the single most interesting project from my perspective within that core group. Outside of that, well, is it wrong if I say entity?
No, it's fun. We accept all fans of ours, so it's good.
we definitely don't mind. We don't mind about the praise, but yeah, we definitely. I think just one thing to point out here: Multiverse X is still a very nascent ecosystem. It's currently growing and catching up to the potential that it has. And there are a few projects that are upcoming, I think, that are very interesting, that will build up this DeFi ecosystem. And I think here we can really work together and strengthen our bonds so that we can really create this very interesting set of synergies, and not, how should I say it, dive too much into a competition in which party brings more or better features, so to say, but which party brings a certain new primitive on the blockchain, first of its kind, or even if it's something that has been seen throughout other ecosystem, but with certain innovations sprinkled on top. I think this is a very interesting path that I've seen slowly developing amongst the DeFi projects on Multiverse X, and I would like to see it continue. So, yeah, kudos to the builders here, and I think everyone is a hero here, as Benjamin wants to put it.
I think that there's a lot of value in what you're saying there, Michael. I think there's a long list of stuff. I think I'm really interested in the use case for some of the end of it, because for an entity like us to succeed in the long run, this is about the projects themselves doing well, because we're a tool for people to move money in and out of different aspects of the ecosystem, and we're a tool for people to be able to hedge it when we've got the derivatives in there. But if you want to convert carbon or someone like that, and you want to be able to make sure that there's an actual end user use case for it, those are the projects that are going to drive exterior people coming into this platform, and we can help by showing better quality tools so money feels safer to come in, but we can't drive the end user adoption on our own.
Definitely. And as we've seen recently, they started to ramp up their marketing for the ecosystem, and also with the new X products rolling out, all of them will be out by summer. So I think it will be a catalyst for the whole ecosystem, and we'll see a lot of new users sprawling into the ecosystem and make it a more flourishing place to be. But talking about the future, I would also like to explore your long-term vision for DX25. As the world of decentralized finance and the larger blockchain industry continues to evolve at a rapid pace, how do you anticipate the project will adapt and innovate to stay ahead of the curve and remain competitive in this dynamic market?
So for us, a lot of the components we talked about are the building blocks that we think are, well, I may as well use the poker references I've had. They're table stakes. We can't be in the DEX space without having concentrated liquidity, without showing some decent steps beyond, without starting to find better tooling on the front end. But the game that we want to play and the place where we want to put our big chips down are all related to derivatives. So we think having derivatives trading inside DeFi is where the scale comes. Now, I don't think I'm saying anything here that the community isn't aware of. But let me be really specific. I think derivatives trading means options and futures, not just perpetuals. And I'm someone where you can go and look up on my LinkedIn profile and find the pattern for perps written back in time. The trading of options and futures have significantly better leverage characteristics, risk management characteristics, and scalability. So if I have to have collateral down, I want that collateral to be able to be shared across all of that pool. If I buy a call and I sell some futures, they should net to very little, and I should be able to then continue to use that collateral to build out more and more trading. Whereas at the moment, what I see out there with perpetuals is there's a sort of one-to-one relationship between them, and the P&L flows between these different markets okay, but there's no offset for market risk between them. So if I build a big position, I can't just offset the risk of the other position because they're going to be tracking against each other, and we should be able to do that. So if I talk about carbon, if I talk about iron ore, if I talk about government bonds or equities or FX, if I talk about literally any asset class in the world, I've worked in agricultures in Africa, all of them, options and futures, are the scale point for cash coming in. And we think that's going to be the same for crypto. It certainly is the same as centralized exchanges. And we think without the regulation that sits over the centralized exchanges, people want to be able to see a complete set of transparency about how that's operating and where the risk is. They don't want their DEX to be basically making its money by being the other side of that trade or putting out some flat dynamics. They want a proper scaled platform for options and futures. And that's us. That's what we're building.
Awesome. Also, one aspect of DX25 that intrigues me the most is the custom fee rates for liquidity providers. Could you please elaborate on the potential of this feature on the overall efficiency and competitiveness of the DeFi market? How do you see this benefiting both liquidity providers and projects in terms of risk management, returns, and market dynamics?
Okay, so this is the feature I was talking about a few minutes back. So the concept that when I make a liquidity contribution in a spot market to a concentrated liquidity pool, I set the fee. And I do it at the point that I do that. And we may have some granularity for what the fees are, so it might not be any, but it'll be at a much bigger range than would generally be available anywhere. And that goes into the pool, and that pool contains a whole stack of different concentrated liquidity ranges that people have contributed liquidity on, and each of them can have a different fee range in it. And that way I can see where everything is. I don't have to go and look at different pools. I don't have to look at different dynamics. Even if I'm somebody who's writing code to this, I can see it all in one place. I don't need to go and examine stuff and build my own collection classes to sort through them. These are sat in front in that one pool. And that gives us a different game theory dynamic within that. What it means is when somebody comes in to trade spot, we have to calculate and walk the tree to work out for each fraction that they're going to trade, which the best of these is. So you might end up hitting 4 different liquidity providers from a combination of the range that they've got up, the volume that they're making available across that range, and the different fee levels within those. So you might pay different fees, but you as a swapper only care that you get the best possible return theoretically out of that you can. Which means it's a market fight for all of the liquidity contributors. If we're contributing the same range, the one with the lowest fee is going to get executed first. So there's a market competition in being able to set those fees. And that also means that if the volatility changes and I'm no longer comfortable with the fee, I can change it without changing pool, and we don't get fragmentation of liquidity. So this is a really big step forward. We think this is something that will probably get robbed from us and adopted by many other concentrated liquidity, and it'll probably be the version 4 Uniswap stuff. Everyone will start to do this, but we want to be there first. And we think this is a high quality step forward where we think the data and the analysis, and that's why we're writing academic papers on it, the data and the analysis shows that from a game theory perspective, this is a more efficient way of trading.
I really like this part about the DEX, about simplifying the overall user experience, be it a liquidity provider, be it a normal user that wants to swap in the most efficient way to get the most efficient outcome. I think this innovation caters to everyone. And going a bit towards also the non-professional investors, retail investors that just want to get the best rates, get the best outcomes without having the hassle of actually managing their liquidity, managing their pools, get the best fees, get the best rewards. How would the simplification of operations work through the liquidity management pools that you guys are bringing? Will it be easier to onboard retail investors to this complex topic of liquidity provision? Because as we've seen, it's on Multiverse X, we have a ton of people that are very passionate, but they are not professional individuals in terms of DeFi operations and such things.
Cool. So I think what we're trying to do here is to mirror how this works in the Traditional financial markets. So if I'm a retail investor in the traditional financial markets at the moment, there are some people who go to Robinhood and some people who go to Revolut and entities like that, and I can go and buy individual stocks or some asset behind that. But the vast majority of money will be invested via fund managers. Now, it may be that I will call it a pension contribution, or I will call it a 401k, or to pick a country and you'll have your own mnemonic for how you put money away tax efficiently. But ultimately, that money ends up with a fund manager. And that fund manager follows some sensible heuristics that I've set. So I will give a view on my risk appetite, the mix of assets that I want, but I won't be prescriptive beyond that. And they will then make those investments for us across a whole bunch of different funds, and they'll put them into either a range of stocks or some bonds or anything like that. This is the way the world trades. This is the way the vast majority of funds find their way into financial markets. In the crypto community, as the complexity has gone up in the DEXs, and the DEXs are the front for DeFi investment, as that complexity rises, we found that the people who were there in the very early days who were able to take part in it, the equivalent of the coffee shop traders in London in the 1700s, are no longer able to take part in that marketplace. So we need to give them a tool. And we refer to this as liquidity management, but the world may refer to it as a fund manager. Essentially, you set up a pool, you pick the assets, and you ask it to optimize across those assets that you're putting into it. And it follows a simple heuristic where it looks at recent historical returns and tries to maximize the deployment of the capital to hit those returns based on recent activity. And that's it. And then periodically it rebalances. It rebalances because the market moves. It rebalances because there's been a significant trade. It rebalances because, let's say, a week has passed. And it will constantly do that to keep your funds in place in the way that they would if they were a mutual fund manager. Mostly, I suspect it's going to be rebalancing because there's been movement in the market. And that way, you can treat it like a slightly more complex farmer. We also don't think, for instance, that we are going to have a monopoly on knowing how to get those algorithms right. So we fully intend to open it up that anyone can write the algorithms for that, put them in, and if they're successful, they all get a portion of the return. And then we can rank, you can see what the algorithms are doing, and you can pick to use the algorithms that are more successful and have more support and follow into those pools. So we don't think we will be the end all and be all of how to invest it in the right way, but we need to put the framework together because this is how this thing scales.
Yeah, I think this is a really, really great and amazing tool for ordinary people, so to say, that to get more into the liquidity provisioning, to participate more, because what we have seen so far is that, as you've said, DeFi in the current state, or at least in the state that it was until the explosion that we have seen recently, was in a very prohibitive state and very hard to access state. It was limiting people due to its complexity, and I think having tools like this that simplify user experience and get everyone to participate in the DeFi ecosystem, be it on Multiverse X, be it on other blockchains, is something that we all need to really push the adoption here, the adoption levels, the liquidity levels. And with liquidity, we all know it comes better spreads, better pricing, better slippage, and all that benefits, better fee for LPs. And it goes right back into a positive feedback loop. Now,
hi, you're very right, Michael. And just to follow through on that's probably why the UTrust platform is one of the most interesting to me, because consumers in that space are completely fickle. If it works for them, they engage with it. If it doesn't, they won't. And they've got the time now to turn it over and to keep refining that. But if they refine that and they find the use case and they get that working efficiently, it's an it's an on-ramp for users to start to come. And if they're coming in and they're getting used to this, then they start to look at the DEXs, the launch pads, and what else can they do with their capital. So that's why that's such an interesting project, which I don't see an analog of in many, many different ecosystems.
I totally agree here. I think it's one of the key pillars here, at least in the terms of the finance DeFi side of it. I think it will be one of the core products going forward to really push the adoption on Multiverse X. But yeah, time will tell, as you've said it, and it's really about getting the right niche, so to say, tapping into the right use cases there for this amazing tool, this amazing project. Now, going forward a bit, I wanted to dive deeper into the auction mechanism that you guys mentioned. We have seen very often that price discovery or price determination for and liquidity for assets that are not that sort of or have a degree of illiquidity, so to say, it's very hard to kind of not get it right or get it in such a way that it's a fair process for everyone. We've seen it with the MADEX price discovery mechanism that has brought some level of fairness or even playing field for everyone. But I'm curious, how would you guys innovate on top of that, and how, if you can give us an example of how the auction processes would work and create more liquidity for maybe illiquid pairs or the liquid markets?
Okay, so they have a couple of different angles where we think they're super important auctions, and I'll try and touch on those separately. But just for the community, if you're a second tier from a liquidity perspective project, you may have a fantastic story, but there's not a lot of activity going on your token, and you decide that you want to put it on a DEX because you need to be able to get supply out there, and you need to be able to have people executing, selling it, hopefully buying it, but often selling it to generate cash in the short term. You go and you find a market maker, and market makers, the prices that market makers will give you, and they do a critical role in this community, but they can be very expensive if you're a small project with an illiquid token, because they have a lot of risk on their side. They've got to cover this market 24/7. They've got to have enough supply in there. It takes them a lot of effort to do it, and it can be relatively expensive. We don't feel that for a lot of projects, a 24/7 AMM is the way forward for them to be able to do their price discovery and manage their liquidity. If I could run, for one of these projects, if you could run an auction once a week, so you could say on your social channels, this is when our auction is going to be, and then people show up and it's based in, let's say it's EGLD, so that we use that as the token for the pricing, and people submit either bids to try and buy the token in EGLD, or offers to sell the token for EGLD, and we get a big basket of those, and we look for the lowest offer that meets the highest bid, and we work out from there what that price is for it, and anything between those 2 points, we sweep up, we match at that price. We say, okay, this is the auction price that we've set, and that gives us a fair value for that contract. That is the mid ground of all of that transactions, and that's the price that everyone who's inside of that range gets traded at. And then we allow follow-on trading, so we have a period of time, like say 24 or 48 hours, whatever it is, and people are able to continue to trade only at that price. So they can put bids or offers in, but only at that rate, and we only match the stack of them at that rate. That gives that project a really easy to manage, without significant risk, mechanism to sell some tokens, to be able to see what the price discovery looks like on the way in. And it gives the holder of those tokens to go, okay, this is when the auction is for that they don't have to spend the whole period of time building up, getting ready to do that. So there's a balance between those two different aspects. We think that's fantastic. For derivatives, when we want to do price determination for settlement at the end of futures and options, we need an auction process. We need a fair, transparent place that everyone comes together to determine what their price is and has an economic effect for having a contribution in that. And that's what an auction is. So they're an absolutely mandatory piece of us building a derivatives place, and they're a fantastic tool for projects out there to not have to pay for ANM type behavior and to be able to generate volume and have a low cost of entry for coming into the community.
That is actually one of the most anticipated parts of DX25. My part is the solving of the liquidity issues of new tokens. So it will be interesting to see it live and in action, and see if the concept is worthy of its of its, how you say it, of its use case. So also I'm curious to ask you is that the derivative solution is one of the fascinating parts that DX25 offers, and I would appreciate if you could provide more insights into what sets it apart from other solutions currently in the market, is and to understand the potential impact of your unique derivative solution on the Multiverse X ecosystem in terms of liquidity, spreads, and overall market stability.
So I think we're not seeing anybody else out there currently doing futures and options. And the few people that are talking about options are platforms for buying and selling. I'm going to say Vega, but implied volatility. If anyone can follow that, that's a very narrow aspect, and it doesn't allow hedging. And I've not seen anything that's trying to do collateral management and portfolio risk. And when I talk to the big market makers in the option space, none of them has been approached by a DeFi project that's trying to do this. They tell me that they've been approached by roughly 5 or 6 options projects a week, but none of them are talking about portfolio risk or back office drop copies or all of these things that you need to do to make these things scale. So we think we've got some unique insights in that we're going to approach that with a proper portfolio risk approach that and calculate our initial margin from historical VAR, some stress scenarios, and model error correction stuff, very much like Prisma would on Deutsche Börse. We think we've got that piece nailed and that we're quite a long way ahead of the game with doing that. The impact for that is going to be massive. So we don't see that there's competition out there. We see there's loads and loads of appetite for trading derivatives properly. And we think that's demonstrated well by the perpetuals that are literally held the limelight for the last 3 months inside this space. That's because people don't trust centralized exchanges anymore. They're looking for places to come and do these, and all they've got access to is perpetual. So that's what they trade. But we think the appetite there is there for the full suite of derivatives. Does that make sense?
Yes, definitely. Thank you for your in-depth answer. And I would like to highlight for the community that if you guys have any questions for James, you leave it in the comment section of this Twitter space, since we are slowly getting towards the end of it. And we have like a couple of questions left. And I would like to ask you, in a world where risk aversion is increasingly prevalent, addressing the risks associated with liquidity provision, especially with derivatives, is paramount importance. How do you plan to mitigate these risks and instill confidence in the users of the DX25 protocol? I'm particularly interested in the strategies and the safeguards you have in place to ensure that the user feels secure and well-informed while participating in the DX25 ecosystem, ultimately fostering trust and long-term engagement.
It's probably not the right thing to do in 4 minutes for me to try to explain the full depth of testing approaches and processes, audit. So of course we're audited. Yeah, I mean, it should go without saying, doesn't, but should go without saying. But audits, publishing the audit reports, publishing academic papers on the mathematics that underpin the pools, running all of the risk management related to derivatives in a transparent and auditable manner, so people in the community can go, yep, I understand where this is. I understand what the exposures are. May not know who that person is, but I can see that wallet's only up to 85% of its collateral, and the rest of the collateral is locked, and that they can't take that out. And I can see what's happening with the volatility. I can see what the delta and the gamma is on it, and I can see what that exposure is. If those words don't mean anything to you, don't trade options. But if they do, they should give you comfort that we're going to be able to publish that stuff in the right way. So transparency. There's no regulation in this marketplace. Therefore, we have to be overly transparent.
Definitely. Awesome. Thank you for that answer. So I would like to ask the community once again that if you guys have any questions, to leave them in the comment section of the Twitter space. We'll give it a few minutes and then see if there are any inquiries from the community side, and then we can close it off slowly. Or better yet, if somebody is brave enough to request the mic, please feel free.
Meanwhile, while we wait a bit on the community to catch up some courage, I really want to highlight here that the importance of a healthy DeFi ecosystem and the relations between protocols. And again, as I've mentioned earlier, DeFi it has building blocks. And here with Entity, and I don't want to speak for DX25, but I think they are on the same page here. We are trying to build an ecosystem on which others can build on top, and we can innovate furtherly by encouraging builders to come and create incredible protocols that tie into each other. So I think the thing that we're all looking forward to, and the synergies that we have built between the two protocols, enable builders to really come and launch a protocol, a project fast, and go to market fast, access liquidity in a very efficient manner. And as James pointed out through answers of the previous questions, we can easily find liquidity, and we can easily find for projects a way to have a price and an efficient price discovery, a very, very efficient use of LPing, and throughout the whole process of launching an entity, a very efficient and fair system to access community funding. I think with all these tools, it's becoming increasingly seamless to launch a multiverse XR project and to build and innovate here. So we encourage all builders to come to put their creativity to the test, to try to bring more ideas to life, and you will definitely find support from both of us in launching and in finding a really powerful home base, so to say, here with this combo between us on launching an entity and gaining access to a very or a highly efficient platform to put your liquidity on and to have your tokens traded by the community. So definitely reach out to both of us. We are more than happy to support builders and to put a plan, so to say, together to launch innovative ideas here. We are more than excited to see the Multiverse X ecosystem grow to the level that it deserves to be, so to say.
In the meantime, we have finally got a question from the community, and so XGoat is asking about safety. How will you ensure the smart contract safety?
There are so many different ways to answer that. I mean, do we talk about re-entrancy? Do we talk about different forms of breaches? So by design, so you start from a design perspective to make them non-gameable, to make sure that as you build out more complex state machines with different forms of collection classes in there, and you have to build your own collection classes in this ecosystem to a degree, that you make sure that you don't have re-entrancy style attacks and attacks around that. And then more broadly, we audit the hell out of them. So we make sure that we have our own internal security people who do the audit. We have our own QA. We have our own groups, and then externally we bring in an auditor to go through those and make sure that we don't have any breaches in them. That's one side. The other side is the game theory piece. So the game theory piece is trying to understand how those things fit together and how they're used by the community to trade, and to make sure that we model those out and understand that there's no game theory plays to play these against each other to take stuff out of spreads. That's more reliant on us, but then when we're pushing academic papers out there on how those are put together, we should see the responses in the community about corner cases that we need to take up. And there's some interesting bits about front running and privacy plays and how you bundle stuff together. I think, and I've kind of parked those because I don't think they're relevant in this space, in this community, in this ecosystem yet. But we've got some views as to how we would tackle some of that as well.
Awesome. Thank you for that answer. Hopefully it answers XGoat's question. But sadly, we are running out of time, and I know, James, you are on a tight schedule, so I would like to thank you first and foremost that you sat down with us and gave us your insights and broke down all the elements of DX25 that we will see hopefully as soon as possible. So thank you once again.
Okay, thank you so much. Great to speak to you. Great to speak to you, Michael. Thank you so much for your time.
Thank you. Thank you, everyone, for attending, and have a nice evening.
And thank you for tuning in. And as all you guys know, next week we are back with a new project, a new builder, and discovering what drives them and how the future looks for the ecosystem. So stay tuned and see you guys next week.
Take care, all. Thank you. Bye.
Take care, everyone. Bye-bye.